The nation's governors met in Biloxi, Mississippi over the weekend to discuss the well-being of state economies. Here to tell us whether investment opportunities lie in state debt, especially those states in crisis, we are joined by Matt Fabian, Managing Director at Municipal Market Advisors. Matt joins us from Stamford, Connecticut. Matt, welcome to Bloomberg News.
Hi, Mark. Thanks very much.
Matt, first off, give our viewers and listeners a sense of how dire this situation is. What did the governors have to say?
Well, you know, it is the most serious revenue situation we've seen in a very long time, to the point where what's happening is states are really reevaluating what it is to be a state, right? The packages of services that states provide to their stakeholders, probably aren't they aren't sustainable in the longer term. So what a state actually does is beginning to change, and that sort of debate is going on. It's very difficult decisions about which stakeholder groups are going to be disenfranchised, which ones will gain support. So it's a very difficult period.
And Matt, I know you have some recommendations, and we'll get to those in just a moment. But you have to have a cast iron stomach to do this. This is not for the faint of heart, is it?
Well, you have to figure out what it is you're investing for, because investors buy municipal bonds for income, or they buy them for total return capital gains, or they could buy them for capital preservation. So when I talk about a buying strategy, it really is for income. From right now, looking at the rating prospects, at the headline news prospects, a total return or a capital preservation strategy are much more speculative in this environment. So you'll have to think about what it is that you want in your investments.
And Matt, let's now talk about your recommendations. Illinois, California, and Puerto Rico munis. Why?
Well, California has been providing a very good incremental yield for really very despite all of the noise about the budget, about the difficult about the IOUs and the disagreements between the political parties. The risk of California defaulting is still extremely low. Puerto Rico, in a very similar way, although Puerto Rico, does have less conviction there. Puerto Rico bonds you can be getting at least 6.5% to 7% yields for a very long bonds. Triple tax exempt, very good security. The governor there has been saying all the right things, has been doing all the right things, but the problems are fairly enormous that he has to wrestle with. Their initial, for example, the budget that they're talking about in Puerto Rico or that they approved for this year is about 20% smaller than the budget that they had last year. So that's a tremendous reduction in the kinds and amount of services that Puerto Rico provides to its citizens.
And what about Illinois?
Illinois is a slightly different case. Illinois actually isn't really a strong recommendation because the yields there are only about 5%, 5.1, 5.2% for long Illinois bonds. So looking at the headline risk and the headwinds that the state is going to face over the next year or so, maybe that's not the best bet.
You mentioned, and I think it's worth repeating, that when you're buying state debt, you need to be clear what you're buying bonds for. Why so specific?
Well, again, the municipal market is an illiquid, poorly traded market generally, and not that the traders aren't good, just that there isn't a lot of trading. It's a market where it's difficult to provide reliable capital gains when you're investing on your own. So I think that you really have to think about it's really an eye on the prize. What is it exactly that you're looking for? If you're looking for just getting that tax-free income and being able to put it away, munis are a great opportunity. If you're looking to outperform some other kind of index and add that kind of incremental return to your portfolio, I don't know, maybe you should be looking elsewhere.
Matt, if we can, let's go back to California for a second.
Sure,
the GOs there, they're in a second position after education, so it's not like you're really going to get hammered there. Will yields go higher?
Yields could go higher. With the state talking about having a budget approved, possibly today, yields will probably go lower from here. Now, at the end of last month, long California bonds were about a 6.2%. As of right now, buyers are getting them at about 5.6 to 5.7%. They could drop further, and that's compared to a long AAA bond of just under 5%. So, you're talking about a 30 or 40 basis point outperformance of the high grade sector.
Right.
It could continue to outperform, but at the same time, there additional downgrades by Moody's, by the other rating agencies, are still likely by year end. So there's still a lot of noise to get through.
Matt, we have about 30 seconds left. The auction rate market, it's still closed. Still a problem?
Well, I mean, it's just a problem to restructure. They're just, it's slowly being remediated. It's not easy because the big, easy ones have been restructured. Now it's the little more difficult ones, and it really may be some time until they can do so.
Matt Fabian joining us from Stamford, Connecticut. Matt, thanks for your perspective. Appreciate
Thanks.
it.